Oh, welcome back, guys. This is Global SMC Forex Trading. So, on this video, we are going to be talking about structure. What is structure? If you all know, in the previous videos, we were talking about structure, SND, and confirmation. This is the way how I trade, or how some smart money traders do. So with this strategy, you find out that you'll be able to understand the market even to its deepest end, giving yourself a room to not be using the indicators, the moving average. By only knowing this, you'll be able to do all those things. So today I decided to do a video of what is a structure, what is it, the thing that we call a structure, market forex. So you realize that when you're defining a structure is just a simple thing to define. How do we define the structure? The way how we define the structure, we use highs. This is the first thing. We use lows. You understand? We use highs, we use lows, right? So now, what are highs or what are lows, or how do we even implement them, right? So let's take, for example, I like to use this thing. Where are you? This ghost feed. A ghost feed is just something that mimics the real candlesticks, like this one. Let's say this is the market, right? The market is moving like this. You see, moving like this, moving like this, moving like this, moving like this. So these are just candlesticks. Just assume that what you're seeing here is just the same as what you're seeing on this. You understand? So what do we mean by highs now? The highs, these ones are what you call highs, because we are forming a high as you're going up and up. We are just having a high. So you find out that as the market is going, let's say it's going to form something like this and this and this, which means the market is just forming new highs, new highs, new highs as the market is going up, right? What do you mean by the lows now? These now are the lows. These are the lows. So for highs, let me highlight this high with what should I say, with an edge. Let's say with an edge, everything that I've indicated with an edge like this. This is this is a high, and again this is a high, this is a high. Oh, okay, this is a high, this is a high, this is again is a high. So you see now, these are what we call highs. For the lows, it's just the same. So these ones, just assume that they are L, which is the low, so that we don't spend much time on this. So the ones with these boxes are the low. So as the market is going, it forms what we call highs and lows. This is how the market even presents itself. But now the market doesn't move like as smoothly as the way that I did. But with market analysis, that's where we teach each other to know what the market does. So with the actual real market, maybe just in brief, you can even see that the market, you can even interpret it like this. Let's use the same thing. This is a low, right? Maybe this is a high, this is a low, maybe this is a high, this is a low, this is a high, this is a low, this is a high. You see? Or maybe you can even just represent this like with even one single trade, like this trailing line. You see, maybe like this. Let me, yes, you can even interpret it like this, you can even interpret it like this. So now it depends with your level of knowledge, or even your experience now. Your experience now will tell you, or will even guide you on how to view your market structure as you're going down frame, or as you're viewing the fractality. This is what we call the fractal nature of the market, whereby the market changes, or it gives a new market shift, or gives a new market structure to the actual real forex market chart. So now the second question is, so what does this helps us now? What are these highs and lows helps us? The highs and the lows helps us to know where the market is trailing to. So you realize that the market, you have two movement, which is something that you call, let me draw a box again, which is something that we call an uptrend. Market moves in an uptrend. Uptrend, what do you mean by uptrend? Up, just going, it's a trend going up. We have what you call a downtrend. We have what we call a downtrend, whereby the market is moving down. So just assume this is a left trend, downtrend. So how do we draw the market going downtrend? So I'm going to draw something like this. Okay, in fact, let me let it back. So for an uptrend, what I drew here is an uptrend, right? Low, high, low, high, low, high, low, high. This is what we call an uptrend because the market is trailing to the upside. For the downside, it's just the same. So for this one, I'm going to use the same, or let me do it like this. Maybe let me put it on this so that I can see it. So for the downtrend now, we are saying the market is moving again like this. You see, low, high, like just trailing to the downside now. So what does this helps us now? If you are able to identify this structure, this is whereby you use the step 2, what you always call sometimes this supply zone. That's when you start to see this, all these supply zone, so that if you get yourself involved in this supply zone, that's when you target high. That's when you even target high. Even on downtrend, that's when you start to use the second concept of supply and demand, whereby you are getting yourself involved now into the real market, so that if the market comes and taps here, you enter the trade as it's going down. If it comes back to the supply zone, then you sell the trade going down, right? So now let's go to the actual real market and explain what all these structures mean in the actual real market, or what it helps us, or why we should actually really know about it, right? So what does the market structure really tells us, or what does it really helps us as we are trading? If you are able to do this market structure analysis, it can even help you to even get into the trade with much knowledge, or without even using indicators to just know where the structure is going. Let's take for instance, this is let me write it. This pair of currencies is euro. This one is euro card. I just took a random pair. I don't usually trade this, but I'm doing it for educational purposes. Right. So let's use the same concept. What are we saying? We are saying this is a low, a high, 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 a low, probably a high, probably a low. So what should you do now? What does this helps us now? So guys, I want you to listen now, how we use this market structure to implement it in the real market. So what happens is you realize that as the market was moving here, we had these highs. This was the first high, you see, right? When it made a new low like this was its last high, you see. When it made this high again, this was its last low, you understand? Then you are going to realize something here. I want to show you something, guys. When the market was coming down to this zone, when it came to this zone, right? When it came to this zone, you realize something, that is the market was trailing up. When it came down, it didn't come here and made a new low. Can you see that? Yeah, I hope you can see that. It didn't even come to make a new low, but what it did, it shifted its bullishness or its uptrend to the upside. Doing what? Breaking even this first high, even this second high, which was responsible for this last low. So when this usually happens now, or let everything. So when this usually happens, or when the market breaks its last high, this is something that you call so if you are a beginner, it's good to write this so that you can know, or you can even interpret it by yourself as you are trading. So CHS just means the shift of market structure. You can even write it the way you want, because this is the way that I just like to write it, the shift of market structure. So what do you mean by the shift of market structure? We are now assuming that since the market broke the last high, which means now the market is changing its market structure, going to the bullish side, or now starting to go up until it goes to these highs. Probably it might even go up to even to this side, but it's not like that is what it's supposed to do, but we are just interpreting what the market is doing currently. So always know that I'm not actually a financial advisor. I'm just doing this for educational purposes. It doesn't mean that it's something that is going to do. No. I'm just interpreting the market structure, you understand? So after this now, what do we do now? This is a daily time frame. You can see here it's written 1D. So let's now go to the lower time frame, because why do we need to do that? As traders, we don't actually trade one daily time frame. In case maybe you're a bank, or you are a very big institutional bank, you have a lot of money, you can enter such positions. But if you have less money, that's when you start to go down frame. So I want you to see something, guys. From daily time frame to 1 hour time frame, with this market structure that we were drawing. Yeah, I know a lot of you're now confused, like, oh, what's this now? So this is what I always talk about. I always like to talk about this. This is what we call fractality. What is fractality? Fractality is a way whereby the market changes its structure, or changes everything as we shift to different time frames. So you realize that the information that we were using as we were at the daily time frame, if we shift to the 1 hour time frame, we are now seeing a new thing, or a new market structure. So what do we do now? Since you know that your last move that you predicted, you said it was a shift, the market is still going up, we can even still use this same information to know what the market is doing at 1 hour. So people always ask me about this question, like, what's the use of time frames? Time frames, they just show you what's happening with the market at that particular time. You understand? So don't like to use it as maybe a way to know where the market is going, or the end strategies, or no. The time frame is just used to know what the market is doing at that particular time. So let's now implement what we are saying. So here again, the market, this is a low, this is a high, this is a low, this is a high, this is a low, this is a high. So you now see, guys, this is what I was talking about now. So what are you seeing now? From this very big move that we drew on the daily time frame, if we go to 1 hour, we are now drawing another thing. You understand? But drawing this is not going to change our market structure. No, we just know that the market is still going up. So this is what we call top-down analysis. Top-down analysis is the best thing that if you master and know how it complements with higher time frames, you never be confused with something like market analysis, or how the market is just distributing itself in the market structure. So let's say now this is our hourly time frame, right? Let's go again on something like this is 1 hour. Let's go to 15 minutes time frame. I want to show you guys what we mean by fractality. So you can see now, guys, again, as the market now is on 15 minutes time frame, you can see that it's even it's even now my laptop is dragging. I don't know why it's dragging, but I'm trying by all means. Okay, so you see now that as we are now on 15 minutes time frame, we are again starting to see the different structure again. You see now, this is what forex trading is. So I always talk about this. It determines, or what determines profitability is not all this or this market structure, but to know where you are with the market structure can help you to even know what you're supposed to do at that particular time. So even if we have assumed that the market is going up, it doesn't mean that even when you're entering the positions, you are just supposed to enter them as they are going up. You can even find the position that can even let you down. Maybe the market wants to do something like this. Maybe the market wants to do something like this, like let's say maybe the market wants to do something like this. My laptop is breaking. Let me see why it's doing that. It's not supposed to be doing this. I'm sorry for this inconvenience. Okay, so let me try to explain it slowly. So what I'm saying now, it doesn't mean that if the market is going the upside or the uptrend, it's just going to get to this point and start to just shift or to start to even move to this high time frame. No, this is not what the market is supposed to do. It can even go down low to this point until maybe breaking even this it can even come and break this last low. You see, the market can even come and break this last low. So that's why we start to use this concept of what? This concept of market structure to actually know where the actual market is. So now let's get back to the actual thing that I was trying to explain now. So on 15 minutes time frame, what we see is the market when it came to this point, right? This was our high, this one was a low, this one was our high. You see, this one was our low, this one is our high, this one is our low. You can see that, guys. This is something that you are even also seeing now. This is what you call fractality of the market representing different thing on different time frames. So let's go to 5 minutes time frame. It's from 15. But on this topic, I'm just teaching you guys how to view this market structure concept with prior to forex trade, so that maybe you won't get confused by entering this kind of trade or all this stuff. You just be able to enter the trade. So I think I'm kind of having the I don't know what's happening. Let me just check for a few minutes. I'm sorry for this, guys. Let me try to save this, or even let me try to, can I just refresh the page like this, and also refresh this one. This one is the one that is having problems, and also refresh this page, like, let me even refresh this. So guys, as I was talking about, don't ever be confused about what you call the market structure, or how we even interpret the market structure. This is an easiest thing that you can do in forex trading. And if you master this, guys, the thing that I'm talking about now, you'll be the best trader in the world, I swear. Okay, now, so what were we saying now? I think now it's okay. So what were we saying now? This is now 15 minutes time frame, right? As you can see, this is now 15 minute time frame. I want to go to 5 minutes time frame. This was our last time frame. It started to do its thing again. Okay, so on 5 minutes time frame, as you can see now, again we are starting to distribute a new market structure. You see now, guys. So you realize that it depends with the time frame that you are, or the way how you want to involve yourself with the traders is going to where you even want it to go. So you can see, like, from this, I want to show you something, guys. As the market. Today my PC is really disappointing. Let me try to open another browser, because this is what's happening is not good. It's not good. It's not good. Why are you being jealous of people who want to learn forex trading? Sorry for this inconvenience, guys. Let me try to open another chat, because I'm trying by all means to just help you guys to know all these things, because it's really important. We don't want a situation whereby people are just still failing to do the same thing over and over again, blowing their accounts, and it's not something that is really favorable. So if you are one of those people who really wants to learn this the good way, so I don't want to spend much time, because I think it have deleted the information that you're using, but it's not even a big thing. So what you're saying, let's just continue with what you were saying. This is a lower high, low. This was a low. Okay, I can't select this one. Let me do this. Okay, this was a low. This was a high, low, high, low, high. You see now. Let's get back to the structure that you're using, and we went back to 30 minutes time frame. So as we were saying, in 30 minutes time frame, you can see that there is an additive thing: low, high, low. This is how you view the market. Nothing is special. There's nothing which is special about market. This is what you just do it. You see now. Let me even go to 5 minute time frame. You see now, when you go to 5 minutes time frame, guys, see what's happening, guys. You're starting to see the new thing again. What are you seeing on this kind of move that we were seeing on the bigger time frame? We're starting to see the low, the high, the low, high, the low, the high, the low, the highs, the low. You see now? Even if we go to 1 minute time frame, the last time frame, you're going to even see the new things: the lows, the highs, the lows, the highs, the lows, the highs. So how do you use all this information to trade now? This now depends with your own decision. Now since I told you guys, I'm not actually a financial advisor. I'm doing this for educational purposes. So to people who really want to be profitable with forex trading, if you keep this in mind, it can even help you. So what you can do, as for me, I like to use like maybe 5 minutes time frame. Then I start to look or to consider where the market it is. Like let's say, for example, after drawing this, right, then I would know that where was our last move before this impulsive move. You can see that the market is kind of creating a supply here. Maybe I would wait for the market to trail back to this point until I start to target to this point. Maybe if the market comes to this point, that's why I'm going to be involved in this trade. This is my decision. But actually, I'm not here to talk about how to enter the trade, but I was showing you guys how the market is fractal. What we were talking about when I was saying market is fractal, I think you saw that it doesn't mean which time frame you are when you're trading. You see now we are even targeting high, but we are saying the market is going up. That's what we said in the higher time frame. So it just depends with the way how you complement all these time frames with your trading style. So that's why sometimes you can even hear someone saying buy when you're selling, someone say sell when you're buying, and you'll be like, how? It's only because you are viewing the market with different angles. So now what I want to encourage you guys, How about forex trading? Forex trading is just a system that you develop on yourself. Understand? You have your own system. Do that system. Try test it. You have a journal of it. In fact, let me even write this. This is really important. This is really important because it is going to determine your profitability while you are trading. When you're trading, guys, what you do when you're trading, you have a system. You understand? You have a system. After having your system, test your system. You see, test your system. After testing your system, you have what you call trading journals. You have what you call trading journals. What are trading journals? Journals are just like reference of trades that you're doing. You can even use some application that I'll provide you the link below that you can even snap and write everything. So after writing the journal, maybe it's after 1 month, right? Go back, right? Go back and revise everything. You see, go back and revise everything. This is what we call what I wrote here. This is what we call profitability aim. This is the aim of probability. This is the aim of profitability. If you are aiming to be profitable, this is how you can become profitable. It's not about this strategy. It's not about even market analysis or no. Yes, this is how you view the market, but the actual thing is on this, right? After knowing this, design your own system. You understand? Design your own system, how to get involved in this trade using this system that I've taught you. Test it. Test your system. How is your system distributing? How are you getting involved to the trade? Is it going up? Is it going down? Right? You're testing your system, right? After getting yourself involved, you bought, you sold. You understand? After buying or selling, right? That's when you make a journal, right? Let's say maybe I'm saying this one is where I'm anticipating the market to come and trail to this point until it maybe shifts to the upside, right? If the market comes and does it and it comes to here, I don't know, maybe I use any kind of entry strategy that I know. Maybe I get involved in this trade and it's now going to target this next high. If it happens, if it succeeds, right, make a journal, take a screenshot, put it somewhere, write it down. Know the reason why I did that, so that if it appears next time, you just use the same concept, right? Now it becomes a system. It becomes a system. You tested it, you are trading it, you are revising it. So you see that with doing that, that's how you start to become profitable, and that's how you can become a successful trader. So some things, they don't even need mentorship, or they don't even need some signals that people still look for. It's something that you do for yourself, that you strive for yourself to even do this. You understand? So this is basically what I was just trying to say. That's how you can even do this or take the forex trading to another level. So as I was saying, guys, there's nothing new, there's nothing special about forex trading. It's just about the system. So I think for what I had for you guys, I talked about a lot of things. So before I finish, I always do a revision. So let's revise or say everything that we're talking about. What were you saying? We're talking about what? As for revision, we're talking about what we call the structure. This is what we're talking about, what we call a structure. What is the structure, right? As I said, the structure is made of lows, highs, lows, highs, lows, highs. You see, this is how the market moves. Let me trail it down so that you guys can see. This is how the market structure moves when it's in an uptrend or when it's going up, because as you can see, the market is going up, right? It forms high, lows, high, lows, high, lows, high, lows, right? Sometimes you can even in these high lows, you can even find high lows, high lows, high lows, low, high, low, high, low. It depends with the time frame that you are. This is what we call fractality, that the market presents itself with different strategies on different time frames, right? So at the same time, again, on the downtrend, if the market is trailing to the downtrend, you just use the same thing, right? What is it? Down, low, high, low, high, low, high, low, high, low. even high, low, high. It just depends. The market can even move the way it wants, but you have to just interpret what it's doing. So here you can see that with this trail, it's showing that the market is going to the downtrend, right? So with this information that I'm telling you, this is actually what we call the market structure. And if you are able to define the market structure, if you are able to know how to define the market structure, I think it can even improve you to do your trading style. So as of my last trades, guys, for those people who are really new at forex trading, don't forget to subscribe on the channel, because in the next video I'm going to be uploading a video about supply and demand. So just subscribe the channel so that you see the next video. And for those who are new to forex trading channel, I'm going to provide the website link, which is below, so that if you are interested or you need some one-on-one trading, or you want to even join the trading community, which we have in WhatsApp group, you can also even do that. It just depends what you are. Just do your decisions, but everything that I was teaching you guys here is just for educational purposes. Even because trading carries a high level of risk, everything that you do, of course, it should be your responsibility. But if you really like this game, it can even change you. It can even change a lot of things. Just you have passion with it, test it. Everything that I told you, go to the market, the real market structure, go and see the highs, the lows, try to test them, see how they are delivering, form them, go different time frame, daily time frame, 1 hour, 4 hours, even monthly time frame. You're going to see that the market structure will never change. It will be always be the same, the way how it moves. Even if it moves like this big move, of course it's going to come and form a low, a high, and this is what forex trading is. So if you now understand what the market structure is, it's now a one-step success. That if you understand now, you have a way, or you have a way to even view the market better than other people that even use well, some other people, they like to use indicators of moving average, or some tools that the trading provides that are here. I don't know where are they. Here, this section, where is it? Indicator section. There are lots of indicators that are here. So the reason why we don't like to use them is like, they can even teach you to be kind of lazy. You have to know what the market is doing with the real-time situation. Train yourself that. You have experience of that. Do it every day. Find a 1 hour of going to the market. Do it until you do it. So guys, thank you for watching the video. I hope you understood everything that I was saying. Thank you. Don't forget to subscribe. This is Global SMC Forex Trading. Thank you guys. I'm signing out. Don't forget to subscribe.